Okay, we're here on the Euro New Zealand. It is Sunday. This is a trade I've only just got in. It's a high and tight flag. These are very high probability trades if traded correctly. And I'm 45 pips down and I've been in it 20 minutes. Oh dear. Let's delete everything off. Let's take a look at this trade and why did I get involved? Okay, so big momentum candle here. That momentum candle was followed by a higher close. We have failed to retest the highs. With that type of momentum, I would assume that we would continue with a pop to the upside. Let's go and take a look at the 240, which is pretty much where we can see our pattern. And you can see here we have a very directional pole, and just here as well. And what I really liked about this was this hammer, this clear rejection candle, then followed by a higher close, instantly rejected with a lower close. And as you can see now, we are starting to make new lows. So people are screaming right now, well, you shouldn't have taken that because it's a double top. Well, yeah, it was a double top. If you look at it here, you also had the RSI confirmation, but there's one other piece of information that you must have for it to be a valid double top. Look left for structure. Needs to be major structure. Okay, you have a shelf here. Then you fell short here. Then you just remove that. Then if we look left, there was nothing there. Let's zoom out. Let's look further left. Okay, we have a consolidation area. We had a single tap there. What else have we got? We've got a very small internal level. Very small internal level. We've got a level there as well. Now, I got to say that this for me is not good enough for a double top. And that is historic data as well. What is more important than historic data is recent data. And the way that we're reading the price is we had a new low, outside return, new low, outside return, new low, failed to put in a new low, giving us a double bottom, which is a reversal pattern, and from that we saw big bullish momentum up to this zone. And guess what we did not do? We did not retest the highs, and we have violated 1, 2, 3 structure levels. So since we've not hit our projected targets, we've violated 3 structure levels, and we have a directional pole showing momentum, plenty of buying pressure, then I am looking at this being a high and tight flag and not a double top. But that doesn't mean I'm right. I'm only going off my experience and the fact that I trade these quite a lot when they appear, and this is completely valid for me. Now, this right here, right now, could simply just be testing these lows, and that's what the market does. It tests you. It tries to scare those people out of the positions. It may spike down to try and stop you out, but this candle doesn't close for 4 hours. It's open for an hour and seen an initial downward spiral. This thing could easily suck back up and be a candle like this and then get a follow through. I've seen these patterns do this for 2 weeks, drive you insane, and then boom, break out. It's a battle that goes on. As long as we don't violate these lows, when I say violate, I mean put a break below, close below. If that was to happen and I saw a small pullback, I would exit the position. Okay, these high and tight flags must adhere to structure, so any type of break below, close below here would invalidate it for me. Let's go and take a look on the 60. you really now get an understanding of, for me, why this was not a double top, because here's the double top, and guess what, this leg here is the leg that should break out. It failed to do that. It saw a pullback. What is concerning is that it failed to retest the highs, and then we saw another pullback. We've seen a little bounce, and typically now with that little bounce we do tend to see the breakout to the downside, but again we are retesting the candle lows. This could easily get sucked back up. So what I've done here, I've got very close stops because of this scenario. So when I say close stops, it's still a big trade, still 57 pips. Targets are as usual that 127 fib, giving us 133 pips. I am front running by, I think it's 4 pips. Let's have a look. I am front running by 6 pips just to make sure. So I mean, it's looking like right now that we're going to break to the downside just based on that candle retesting the lows, but by no means does it mean that's going to happen, and you should not exit the trade. The trade will be invalid when my stop has been hit, and it will be valid when my target has been hit. So mixed bag here of, we've got things that are telling us price is going to go higher, but we've got price now retesting the lows. At the end of the day, the trade is the trade. It is perfectly valid for me. This is an initial structure high. We haven't retested any type of major structure there, so I'm expecting now a continuation. Whether or not that happens, I don't know, but not very nice to see 42 pips down when you just opened the market 50 minutes ago. But I will be confident and I will set an alert up here and just see if we can get up to that level, but preparing myself for a potential loss, but we don't know what's going to happen, obviously. So that's the trade. We will leave it now. My work is done. We will see the outcome. We're back for the update on this Euro New Zealand high and tight flag, and as you can see, I have been stopped out. Just going to drop here to the 60, and what a cracking looking trade this is. We had a double bottom, so we expected a big rally, which is a reversal pattern. We had a nice directional move. We had a very small amount of internal structure. We were made a low, outside return low, outside return low, double bottom, broke all of that structure level. We'd put in a very nice double top. We'd come down for another retest, put in a higher close, we're heading up, and we just stopped in reverse. So I would take this pattern again and again and again. It is very, very profitable, but unfortunately this time it lost, and it lost for 52 pips.